Joining us now to discuss is Greg Magadini. He's a director of derivatives at crypto insights provider Amberdata. Greg, good afternoon. Good to have you on the show. So just want to get your insights into Bitcoin's reaction to the Fed decision. We see that it's paring back those gains a bit.
Yeah, absolutely. I think there's really two buckets in crypto. There's the macro view, and then there's the micro industry view. So obviously in the industry view, FTX has been kind of moving headlines back in November. Now we are in the macro view. What we're seeing in the options market, which is a great way to gauge sort of the participation of the macro perspective. Yesterday, we saw a huge flattening in the implied volatility term structure going into CPI. That basically means that options traders are looking at this number, they're pricing it accordingly, and then post number, it quickly came back off. And same thing with the FOMC, but to a lesser extent today. Options traders are looking at this market, anticipating what's going to happen, and essentially proving that they're paying attention to the macro events as well as the micro events. Now, with the reaction today, I think one of the things that we have to keep in mind is that as long as the unemployment rate remains relatively low, as Powell kind of said in his press conference, there seems to be sort of a structural shortage of potential employees. And at the end of the day, they're going to make sure that affords them the ability to make sure to raise rates enough or hold them out long enough to bring inflation down. Something I like to kind of just think through as a mind exercise. If I was in Powell's shoes, and it seems like this is what he's really worried about, is entrenched inflation expectations. Inflation is on everyone's mind from sort of whoever you're talking to, your family, your friends. And so we want to make sure that doesn't get entrenched. And if it does get entrenched, what happens is that savers are penalized in an inflationary market, and people have to take more risk to sort of keep up with everything. So we don't want to have that type of environment for our economy. So what's happening here is that the Fed still has the ability to hold out rates longer. And so what we're seeing here is sort of the risk of risky assets are taking a hit because the discount rate being held out longer or a slightly higher terminal rate is affecting things like crypto, growth stocks, and equities in general.
Great. We saw that Bitcoin was up over $18,000 this morning, but FTX's fall continues. Binance CEO CZ is saying that there are turbulent times ahead. What are your thoughts?
Yeah, so I kind of have two views. Going into the end of the year, I think basically nothing happens. We're back into this low realized vol environment. Option markets are pricing a premium. There's a variance risk premium to be harvested by selling options and basically just betting that nothing happens into the end of the year, which I think is kind of the case. Now, going into 2023, here's the big picture. This is the first time ever that crypto is trading in an environment that isn't an easy money environment. We're getting out of an easy money environment. How does that affect the crypto market? There's an argument to be made that excess liquidity found its way into crypto, which made higher valuations. Now, I still have a fundamental perspective that crypto is a game-changing innovation. I still think Ethereum, for example, goes to 10,000 at some point. But in the short term, we are sort of at the end of an easy money policy. And it's really hard to say with any conviction that this is the end of the bear market and now it's a bull market. I still think there's more price downside just from a risk perspective. And so I ultimately think Bitcoin hits 10,000 some point in 2023. And I do think there's another episode of bearish markets and risk assets in general.
So do you see Bitcoin falling lower still? Are we going to see a bottom? I just mentioned that Van Eck, investment giant, saying that we could see Bitcoin testing the $10,000 to $12,000 support level the first quarter next year.
Yep, that's the exact levels that I'm looking at. 10,000 has been such a big liquidity pocket in the past that traders are going to want to see how do market participants react at that price level. And I think it's really important for us to trade at that level and essentially see if there's real true buyers appearing at 10,000.
Anything further that you picked out of Fed Chair Jerome Powell's talk today? Anything that struck you? You mentioned the employment level and how that may inform risk assets into 2023.
Yeah, I think that's the biggest kind of biggest situation is the unemployment rate. And we've had a huge kind of lower shift in the participation rate. So a lot of people dropped out of the workforce, about 4 million people, if I'm remembering right, versus sort of the previous recent history. And so that causes a lower unemployment rate just because a lot of people are not looking for jobs. And so even as myself as an entrepreneur, when I was running Gvol, hiring was really hard. And it's still an environment, even despite everything that's going on in crypto, it's hard to find talent. And unless we get a tick up in unemployment, I still think that there's a lot of room for the Fed to maneuver on rates.